Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of May 18th, 2026. Let's get started. SEAF signals for this week. We retain technology and materials and pick up consumer staples. Technology won across the board on the week, still with that high ranking of overall of 3. Materials kind of coming in that negative skew, being held up by a strategic quarter from 2 to 4 to 6, and consumer staples coming in with a strong trading week at number 2. We'll highlight something about that a little bit more in the heat map just in a second, but overall score of 13. And then with energy and real estate coming in with 14 overall to stay in favor. Seeing energy start to kind of pick up on the trading week and the tactical month, very much being held back by its strategic quarter. Seeing financials here toward the bottom with 11s on the tactical month in the trading week with an overall score of 25, and utilities coming in last with scores of 10, 10, 9 across the board. Highlighting in our heat map, just wanted to note, we're seeing real strength again in technology, and just for a point, 1.21% inflow on the trading week. That's still significant flows coming in. 0.4 is kind of our indication of a serious inflow, and we're at, like I said, we're at 1.21%. So significantly 3 times over the significant level in terms of flows coming in for technology. But just to note, as we've been saying really for the past month and a half, flows outside of technology have been relatively weak. Coming in 2 was just consumer staples on the trading week, 0.05%. So that's a giant chasm between money flowing into technology and money flowing into anything else. Money still aggressively flowing out of financials, negative 0.48%. Overall, we were pretty much net zero on the week in terms of assets flowing into the 11 sector spiders. Kind of closed up by Friday, which had a 1% outflow for the 11 sector spiders. As I said, kind of starting to see a little bit of a positive skew here on energy. But again, these are on weak accumulation. So really, again, outside of technology, not seeing a ton of strength in flows. If anything, seeing some outflows. And you could tell this heat map is really paints a really good picture. Outside of tech, everything is yellow or red, meaning we're seeing either neutral or outflows in terms of all the 11, the remaining 10 sector spiders. You can see this 1% decrease here on the trading week, still significantly above our 21-day moving average. This is our sector total AUM. For those who are new, this is the 11 sector spiders. If you added up all their assets under management and plotted it together with the 21-day moving average, and then this is SPY. As you can see here, we've had a really nice run up since we've crossed over that 21-day moving average, with asset flows really kind of spiking to all-time highs. This is 380 billion. We got real close to that late last week. With that little bit of a downturn was Friday with a 1% outflow of the total assets here. But again, still have some room to run, understanding, we're also trading off of fresh all-time highs late last week in the S&P 500. So this thing has not crossed down below that 21-day moving average, and overall still showing relative positive uptrend in terms of asset flows going back to late March. Heading into our rainbow charts, looking at financials for last, sitting in that void. We've kind of been neutral or void for a little bit here, really underperforming, broad underperformance on financials. And again, like I said, pretty strong negative outflow in that trading week with negative 0.48, which is significant. So money's definitely flowing out of financials. On the flip side, technology remains really strong. Top ranked sector now multiple weeks in a row here. As you can see, we're kind of flat up here up the top. So nice strong scores all the way through with ones across the board. Really strong outperformance of the broader S&P 500, which is impressive because, again, like I said, S&P 500 made fresh highs last week. So technology really has been the place to be in terms of where we're seeing the money flow and where that relative outperformance is. With that being said, consumer staples and materials are very much in a similar boat. We're sitting in that lower favored territory. We have been for some time here with materials. Had a nice little run up. Now it's underperforming the market in general. Kind of a similar situation here for consumer staples. Got up into that green and that favored. Had a nice little run up, and then as the market has taken off, has really kind of similar patterns here. And again, so what the SEAF model is trying to do, and I keep saying this ad nauseum, but it's been, just because it's week to week doesn't mean my analysis changes. And right now, this is a technology-led market, and the SEAF model is going to do its best to rotate through the other sectors to try to catch the next one that wants to start to relatively outperform the S&P 500. There are going to be times where the market is extremely concentrated, and the money's flows goes toward really one sector, like we're seeing in technology. We saw it a little bit earlier in the year with energy as well. And we kind of just have to watch those asset flows. What this is also going to mean, though, is as we rotate through those other sectors, we could see a little bit more of a revolving door on that second and third SEAF selection. But the important part is if we catch these things at the right times, as we transition to them, we can get into some of those other trends early as the money becomes a little bit more solidified or spread out. This isn't, I don't believe for a second this is new normal in terms of just having one sector lead the entire market and the rest showing either neutral to outflowish type behavior. So SEAF model is going to continue to rotate through the sectors and give you the sectors where the money is flowing the best. Right now, that's technology, materials, and consumer staples. And depending on how asset flows track for the next week, we could be shifting again. Or, like I said, we've been in materials and technology for a few weeks now. So, again, a heavy concentration in technology. Looking as the market has gone straight up for a little bit, we're going to see some little bit of relative underperformance in some of the sectors, even if they are in favored status. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.